you've been very, very transparent about where you are on the dot plot and what your forecast is. So let's start there. Where are you for this year? Where's your dot? What are you looking for?
Yeah, so I'm unsurprisingly the lowest dot. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation. So as you have talked about with many of your guests many times before, shelter inflation really, really lags a lot. And because average tenant rents have caught up to new tenant rents, because market rents have been running at a 1% rate for a couple of years now, I think it's appropriate to sort of think about underlying inflation as abstracting from that a little bit. The shelter inflation is indicative of a supply-demand imbalance from 2022, 2023, not 2027. We need to be making policy for 2027 because of policy lags. And their side of it is the portfolio management fees that I'm sure you've talked about again with many of your guests many times. Stock market went up, mechanically inflation moves higher, despite many of your other guests, I'm sure no doubt, telling you about fee compression in the asset management industry for decades. So you abstract from those two things, underlying inflation is running at 2.3%. That's within noise of our target.